Good afternoon, everyone. On Friday, October 10th. Why did we lean short today? It's just like a horror movie. What do I mean by that? A slasher movie, and you have Halloween coming up. You know the slasher's coming out. You're not sure when, and you're not sure from where. But the key in there is you have enough negative divergences that it doesn't take a lot of news to move things down. So when you saw this chart, the second it broke here, great. That's where you pounded to the downside. That was good for 120 points. We just bought some SPX put spreads, took our 300%. We were out. Now, we bought them up here, and I walked away. It's one of those things, like I said, it's going to make you just don't know when. I mean, immediately we were down money, but it did work when Trump mentioned about China and tariffs. And like I said, buyback blackout time. So there were a couple of reasons on why we went down. Number one, 57% bulls on investors' intelligence. That's a lot. And only 15% bears. That's very small. AAII sentiment, 45% bullish, 35% bearish. Number three, buyback blackout time. Doesn't take a lot of news to nail something if a lot of companies can't buy back stock. Or let's say this, 5 weeks prior to earnings, they voluntarily don't buy back stock. Number four, you had a bearish pattern. Number five, you had the high yield bonds already getting nailed. Usually the high yield bonds and the S&P move together. As you see, this broke down days ago. Number six, the XLF rolling over. So you have the XLF rolling over, you have the high yield bonds rolling over, you have the lack of buybacks, you have that everybody and their mother is leaning long, and you combined it with an ultra short-term chart. So those were great reasons on why we leaned short. So you could have taken the stocks that were our favorite on the downside, the MasterCards of the world. Now, why did we take the MasterCards? Because it was overbought under its 50 moving average. We're determining uptrends or downtrends by the moving average. As you see, this got overbought under the moving average. That was one of them we didn't like. Capital One, close to overbought under the moving average. That was a beauty. Both of those. Boeing, overbought under the moving average. And everybody and their mother is buying Amazon, even though it's overbought under the moving average. So the key in there is, sure, you can make money in Apple, no doubt about it. But I like to take the stocks already down. So if the market goes down, they were already acting poorly anyway. They're going to get nailed. If the market's going up, heck, they weren't going up anyway. So that's your risk reward. That's our probability wise. And when, like I said, everybody and their mother is leaning long, that's when we lean short. Take care. Have a good one.